Oil prices surged above the $100 a barrel mark on Thursday, reaching their highest levels in nearly 2 months as investors reacted to fresh disruptions in Middle East energy supplies following new Houthi attacks on Saudi oil tankers and the continuing conflict between the United States and Iran. Brent crude futures climbed $6.23 or more than 6% to $100.3 a barrel as of 1:08 a.m. Eastern Time, crossing the $100 threshold for the first time since late May. The global benchmark has now gained nearly 40% over the past month. U.S. West Texas Intermediate crude also jumped sharply, rising $4.88 to $91.71 a barrel, trading above $90 for the first time since June 11. Both benchmarks have now posted gains for a fifth consecutive trading session. The latest rally came after Yemen's Iran-aligned Houthi movement said it had attacked 2 Saudi oil tankers in the Red Sea, opening a new front in the regional conflict and raising fears that energy infrastructure and shipping routes beyond the Persian Gulf could increasingly become targets. The attacks follow the Houthis' announcement earlier this week that they were imposing a naval blockade on Saudi Arabia, saying Saudi-linked commercial shipping would be targeted in response to continued U.S. military operations against Iran. The Saudi-led coalition has vowed to respond, while maritime security agencies have warned of heightened risks for vessels transiting the Red Sea and Bab el-Mandeb Strait. The escalation comes as the U.S.-Iran war continues to intensify. American forces have carried out another wave of strikes on Iranian military and infrastructure targets, while Iran's Islamic Revolutionary Guard Corps has launched fresh missile and drone attacks against U.S. military assets across the Gulf. Tehran has also maintained its effective closure of the Strait of Hormuz, one of the world's most critical oil transit routes, severely disrupting global energy flows. The Strait of Hormuz naturally carries around 1/5 of global oil and liquefied natural gas supplies. Combined with threats to shipping through the Bab el-Mandeb Strait, traders are increasingly concerned that two of the world's most important energy choke points could face prolonged disruption. Despite the heightened tensions, shipping data showed that 2 Chinese supertankers carrying a combined 4 million barrels of Saudi crude successfully exited the Red Sea through the Bab el-Mandeb Strait on Thursday, offering some reassurance that limited commercial traffic is still able to move through the region. Analysts, however, warn that risks remain elevated. Goldman Sachs said Brent crude could exceed $120 a barrel during the fourth quarter and average around $100 next year if disruptions in the Strait of Hormuz continue through 2027. The bank added that prices could climb even higher if attacks also led to sustained disruptions in the Bab el-Mandeb Strait and the Suez Canal. As a result, total oil loading activity across Gulf export terminals has dropped dramatically, averaging around 2.5 million barrels per day over the past week, compared with roughly 6 million barrels per day over the previous month. Meanwhile, despite the conflict, 7 key OPEC Plus producers, Saudi Arabia, Russia, Iraq, Kuwait, Algeria, Kazakhstan, and Oman, are expected to approve another production increase of around 188,000 barrels per day for September when they meet on August 2nd. However, analysts caution that the ongoing conflict may limit the ability of some producers to raise output, leaving global markets vulnerable to further price spikes if the security situation deteriorates further.